Jim Wyckoff joins me this Wednesday right after Janet Yellen's testimony, which put pressure on gold below 1,300 right now. He's up next. Jim, thanks for being back with us.
Hi, Daniela. Always nice to be with you.
Jim, let's talk gold. Gold extending losses here from earlier this morning, falling below $1,300 right after Yellen's testimony, with comments that the marketplace deemed upbeat. She said a high degree of monetary accommodation remains warranted. Let's look at what this did to gold, Jim.
Yes, Daniela. Her testimony before Congress on Wednesday was going to be very closely watched for any nuances, anything that she might say that would fall into the hawkish or dovish camp. I'm not sure if she said anything so far that would fall into either camp in a significant way. But what she did say was that the U.S. economy is on the upswing. Her comments on the economic outlook were upbeat, and that served to put a little downside price pressure on gold, just due to the fact that it may allow the Federal Reserve to back out of its quantitative easing and its monthly bond buying at a faster pace, maybe than some expect.
Adding to this, Jim, we have Russian President Vladimir Putin, who said Wednesday he plans to de-escalate the crisis in Ukraine.
Right, Daniela. Putin reportedly said on Wednesday that he does not want to see another referendum in Ukraine on any more secession of territory. He also made some other comments that were deemed by the marketplace to maybe think that he might want to de-escalate the situation a little bit. And that put some price pressure on gold. Gold had been supported here the past couple of weeks by some higher anxiety over the Russia-Ukraine tensions. And I guess what Putin did was he just served to ratchet it down maybe a notch, the escalation.
Let's talk ECB now, Jim. A policy meeting is set for Thursday. Now, we really haven't seen anything new come out of these meetings lately, but could there be a surprise tomorrow, Jim, with the rallying euro? Could we see a change to the monetary stimulus measures here?
There's a better chance of that happening, Daniela. Not only has the rising euro caused concerns about higher European Union export prices worldwide, but it's also the low inflation rate, the extremely low inflation rate in the European Union has caused some concern about deflation. And that's another argument to ease monetary policy. You've got the strong euro and the specter of deflationary price pressures. That is weighing very heavily on ECB central bankers, for them to make a move to lower interest rates and or ease monetary policy further.
Jim, let's wrap up now with your Wyckoff market rating, where last week we saw you give silver its lowest rating ever.
Danielle, I'm giving silver a 2, still fully in the bearish camp. We've seen a little bit of short covering, but this silver market remains in a solid price downtrend. We've got overhead resistance at 20, support below the market at 19. So the market, I think the path of least resistance for silver is going to remain sideways, slower until we see some kind of a significant bullish technical development that we have not seen yet. Now, looking at gold, I'm giving gold a Wyckoff's market rating of 4, still into the bearish camp, but we still have some more work for the bulls to do to suggest that the gold market can sustain a price uptrend. I do believe, however, that last week's price action does hint that we have put in a near-term market low. That doesn't mean we're going to go sharply higher in gold, but it does suggest we put in a low and that maybe prices can grind sideways, if not sideways to higher. We've got overhead resistance for June gold at 1331 and change, and then we've got solid technical support at 1268 and change.
All right, on that note, thanks so much, Jim.
Thank you, Daniela. Can't wait till next time. Bye-bye.
And thanks for watching this edition of Technically Speaking with Jim Wyckoff. We'd love to hear from you, so email us at newsfeedback@kitco.com. Thanks for watching.